Alright, what's up, guys? Uh, Man, it's been a while since I've done a video, but I'm literally just going to do this on the fly. I haven't done hardly any marking up of the charts, but we're going to do some technical analysis. This is not financial advice. This is just my opinion and my experience of working with smart money and the futures of Nasdaq, the S&P 500, and we're going to take a little bit of look at gold as well. Um, Now, what I have been trading on has been Apex. I'll give you a link down in the description so you can try it out too. Basically, all it is you could be funded. Uh, you have to pay a monthly fee. Once you pay the monthly fee, once you reach a certain amount, then you get a contract to actually start trading real money, and they fund you. So um, it's not as easy as it looks unless you are a good trader. Unfortunately, I have yet to be funded. I have been doing this since June, so I may be great at analyzing, as I like to think, but translating that into actual earnings is a completely different story. So we'll try to analyze and let's see, hopefully, if we can learn from what we have seen these past couple weeks, months, all that good stuff. So I am starting with the NASDAQ monthly here. Remember, a few months ago, I did say that I did expect the Nasdaq to fall down into 14,000 range because of this monthly fair value gap. Now, why did I expect it to fall into the monthly fair value gap? Because price is attracted to imbalances, right? So that's why I expected it to fall down in here. And sure enough, it did. It hit nearly the consequential encroachment or the midway through that fair value gap. If you don't know what a fair value gap is, it is a succession of three candles, right? Over here, you have one, two, three, and if these candles do not balance, meaning their wicks do not touch on either side, then that is an imbalance. So if it's not balanced, so if this wick doesn't come up here, if this wick doesn't come down here and touch, then that is an imbalance. Price likes to be attracted to imbalances. How long does it take to come to those back to those imbalances? That is a completely different story, but they eventually do. If you take a look at Bitcoin, especially, maybe I can bring that up for that theory. Um, if you look at it, whenever it happened in 2020, I want to say. I didn't get that. Could you try again? Sorry, Siri. I didn't mean for you to be turned on. Um, Back here. Yes. Back in, let me see here. This is a monthly. Um, yeah, it was here. I think it was around this area here, 27,000. It was whenever Tesla decided they were going to announce that they were putting money or treasuries in Bitcoin. And Bitcoin just kind of flew up after that. Everybody was all excited, and I had been studying smart money at this point, and I knew that it was going to be coming back down to that area, and I was waiting for it. I called my personal call at the top was 56,000. Um, I exited then. I didn't have much money in it back then. I barely gained anything out of it. Um, but because I got into crypto way late into the game as it was going up, basically. Um, so, but I knew it was going to come back down. So I was waiting for it to come back down. I also called the bottom to be somewhere around 15,800. If you check out my Tradingview, my front page, you'll be able to find that in my ideas. I'm not trying to like boast myself or anything like that. I'm just trying to say if you study smart money, eventually you will find these things over and over and over again. So if I go to my profile here, um, you can see all these things that I have called, um, and this was the most recent. But if you go to filter ideas, maybe I can find the Bitcoin one that I called nearly a year. I think it was over a year ago, to be honest. When I said it would fall. Let's see here. Here we go. last short to pivot nearly 15,825. So that was my call for Bitcoin to be at its lowest point. Where did Bitcoin get to be its lowest point? I was almost right there. So I got to about 15,400 and I called it to be about 15,800. So smart money theory, smart money concepts, whatever you want to call it, is, in my opinion, very credible. And I would say the godfather of these ideas are the inner circle trader. So if you want to know more about the foundations of smart money concepts, check out his videos. I've just added a little bit of my own twist to it, found some different things that from other smart money concept um, traders have found, and kind of mishmashed my own uh, trading theory. Again, this is not trading advice. This is not financial advice. This is just analysis, my own personal analysis of the markets, basically. So we're looking at Nasdaq on the monthly. We saw that November we had probably one of the best months that we did have, and we stretch it up as you can see. It did come up to it didn't break the high. Um, its wick got almost to the high of July, but it still did not break. However, it did break the short-term structure. Now, why is this a short-term structure? Because there is a wick down here that got below the body of this candle. Now, because of that, this red candle is basically out of structure. So these two candles right here are in structure. They are balanced. So therefore, this one comes up out of structure, meaning we are bullish, right? So that would be a bullish structure. However, there is a monthly fair value gap that did form in between, let's see here, September, or was that, yeah, August, September, and then October. So there's a small monthly fair value gap. I have a feeling we're going to be seeing the same thing. I don't know how long it'll take. Who knows? We may get another rise for a couple months, and then it come back down to this fair value gap. But all I'm saying is keep an eye on this monthly fair value gap that happened in between, uh, you know, August and uh, October. So just keep an eye on that. All right, so we're going to go with that from there to the weekly. So as you can see, as we have started out this week, uh, we started off with a low day. It hit the bottom, and then it started to make a run back up toward the end of the day. Um, and it looks like it came down. It almost touched that monthly fair value gap. Uh, that could be also an indication that we are looking at that this could be coming down into the monthly fair value gap sooner than later. Or what it could mean is that there could be a bullish breaker, right, which could be over here. Now a breaker forms from there is a low, right, a high, and then a lower low. So if I was to draw that out, let me see here in the path, you have a low, you have a high, you have a lower low, right? And that would your actual higher, or your green candle on the way up to there, would be considered your bullish breaker. So it would be this whole candle right here. Now, if we wanted to dig down even deeper, we could probably find one in the daily that would be more susceptible to what we are looking at. So if we looked at this low, high, lower low, or maybe even here, low. Actually, this green candle's higher. So I would take a look at this candle right here, right? So we have this low, high. Even though it does kind of consolidate for a couple days, it still makes a lower low, breaks down lower, closes below this structure. So I would be looking at that candle right there as your um, breaker, right? Now, what do breakers do? This is not kind of a supply and demand thing. This is literally just technical analysis of smart money concepts. Um, so this means that since it ran up through that area, I mean, it just basically ran up through it with no resistance throughout a day, and then comes back down to it, it's acting as support, right? So if we do get back down to this monthly fair value gap, I would expect it to quickly hit this monthly fair value gap and run back up. If it doesn't, and it stays down into this monthly fair value gap, it could run up and hit the top or the bottom, the bottom of this breaker, and then basically kind of get stuck underneath here, because then this would act as resistance. So it just depends on where the how the price delivery is, what kind of news is going on, time of day. All of those play into a factor of what could happen into the market. So today, as you can see, it fell down back into this breaker, right? About halfway through, almost exactly halfway through uh, of this green candle here. So that would what would be called the median threshold, right? So that's almost perfect price delivery for a smart money concept theory to be played out, right? So it comes down in, hits the median threshold, bounces back out. And so what are we looking for next is the question. Well, considering we didn't break structure up here on monthly, um, and we haven't got down to this monthly fair value gap yet, uh, there's, and I always say this, there's always two scenarios that could play out, right? There's the upside and the downside. Um, and just depending on, and I never know what's going to come. I'm not psychic. I just try to read the charts as what's happening, you know, currently, and try to give my best opinion and try to understand where it could be running to next. So if we look over here and we see we have another low, high, lower low, we have another breaker sitting right over here, right? Now, as you can see, we have not seen a close above that breaker, which pushed it down. We didn't see a close in this breaker either, which pushed it up. So it's kind of stuck in between two breakers right now. So while also filling a fair value gap. So there's also a daily fair value gap right in here, which it did fill, completely filled. Now, when it fills fair value gaps, it usually like to fill them going both directions, meaning going up and going down. Now, since it did fill this going up, also hits the breaker, doesn't close above it, comes back down, fills it that way. My interpretation of this would be more on the bullish side. I don't think we're going to be reaching back into this monthly fair value gap. What now? We also have to think about what's going to be on the calendar. So if we take a look about, I always go to Forex Factory. People have, you know, other calendars, event calendars, things of that such, that could lead to what their analysis might be. Forex Factory does generally give, well, let's go with the 5th and the 5th only. So we'll just go with tomorrow. Actually, you know what? Let's look at the whole week. Never mind. And let's see what could be happening throughout the whole week. Because, yes, this is non-farm payroll week. So, non-farm payroll week is when basically price delivery gets a little wonky. Um, That is generally, this is the week that I have been personally mentored and personally trained. Once the morning session for the non-farm payroll starts, that should be your last trade that you should have for the week. Thursday and Friday, do not touch, is what I have been personally mentored by. Again, not personal advice. You can do what you want, but I have been advised by a mentor, do not touch Thursday and Friday, or Wednesday afternoon session on non-farm payroll weeks. Why? Because the price delivery, the algorithm that is in place. Yes, there is an algorithm. because the markets are manipulated. That's what smart money concepts are all basically about. Markets are manipulated, and this is how you find out the manipulation. And it's not about trend lines, it's not about channels, it's all about these weird little things that we find in the charts, um, that I'm basically showing you now that not every retail trader would think about. And these generally work. And so that's why I follow them. Right. So that's why I'm saying what I'm saying now. So it filled the it filled the fair value gap down to the bottom of the daily, right? Also, median threshold of an order block did not close above these order blocks, but it did reach above them. So to me, this says that more than likely, as of tomorrow we're going to get some kind of numbers. We're going to get the ISM services PMI numbers. We're also going to get jolts. So jolt is going to be a huge number. Um, that could affect the dollar. I mean, it could affect the dollar in a very good way, and it could affect the dollar in a very bad way. It looks like we're expecting 9.31 million in the forecast, a previous 9.55 million. So we're expecting it to go up a little bit, which means I think jolts is job openings, losses, and transfers or something like that. I've not 100% on what jolts exactly means, but it is a jobs um, related uh, number to for the economy. Um, so if this ends up being short of our expectations, then what we would see is we would see the dollar fall, right? Probably lose a little bit of momentum. If the dollar loses momentum, the inverse is generally is expected for uh, um, the equities. And this is an equities market here, would be the Nasdaq. So you would see the equities go up. So, and if the opposite, if we overshoot the jobs, um, uh, the jolts number, I should say, you could see the dollar go up, and then you would see probably a retracement back down as far as Nasdaq is concerned. My personal opinion, I don't think we're going to hit this mark as far as the forecast is concerned. I know jobs have been getting better, but I don't think we're going to be hitting that forecast. Actually, I'm not for sure if that's a better number or not, to be 100% honest. But I don't think we're going to make this mark. Um, I think it's going to be in the red here, like our factory orders just were today. And I have a feeling that NASDAQ will be going up. If we take a look at the spot price or the CFD prices, the Nasdaq 100 here. This is basically a completely that was the futures. That was on NQ, which is the E-mini Nasdaq futures. This is the cash price. This is the CFDs. Um, so they're a little bit different. They're not much different. See, this is 15.8, 14.7. Right now, we're currently sitting at 15.84850 on this. So it's not much different, but it is a little. Um, and this is the current contract of December of 2023, right? This is the current cash price, right? So if we take a look at this, again, if I get rid of this, I probably had this marked up for some reason. I'm not 100% sure. Looks like there's also a monthly fair value gap that happened back, let's see here, that was May. And I think if we compare that to this, and we go to monthly, I think that May one is the one that we dipped down into. Yes, it was. So the May one was the one we dipped down into as far as the futures are concerned. But as far as the spot price is concerned, it did not dip down into it. It actually just touched the top of it and ran back out. So there is your biggest differences between the cash price, the CFD price, and your futures, right? So I just wanted to point that out. So again, take a look at the jolts, and we'll take a look at the daily, And also, if we want to take a look at what happened today in the hourly, that's actually what I really wanted to look at to show you, what happened as the market opened. Um, Whenever Friday ended, right? So we have Wednesday kind of dropped down. Then we had Friday, it went back up and ended on a better note Friday. Today, as soon as the market opened, it dropped. I mean, it dropped immensely. I don't know if that had to do with the factory orders. The factory orders shouldn't have had a huge impact, but considered it missed the mark extremely, it could have. That could have been why we had a huge drop in the Nasdaq. Right. So again, watch for the jolts because the jolts number that will be coming out at 9 a.m. tomorrow. Right, 9 a.m. So that's 9 a.m. my time. I am in Central. That would be 8 a.m. Eastern time. So it'll be before the market actually opens. So we should see the actual um, hopefully the biggest run of the day happen right at the opening. If it doesn't, there's always the evening or the afternoon session as well. Starts right after their lunch. The New York lunch. Again, I'm in Central Time. New York lunch is in between. I think it's 11 a.m. Well, it'd be my 11 a.m. to 12 p.m. It'd be their 12 p.m. to 1. Um, So the in between the 1 and 2 and the New York time is when you will find um, the biggest chance at finding another opportunity to jump in the market, right? So if you miss the first one, um, try to analyze it, get down, see if there is a fair value gap, see if there is a breaker forming somewhere. Uh, that way you can see if the price is going to be jumping down into it. Um, and if it will the price get rejected by the breaker? Will it act as support? Or will it run underneath it? And if it does, expect it to be then resistance. Um, or also check out the fair value gaps because they could be running up into these fair value gaps, just as it looks like this one may have. Let me see if I draw this out as a fair value gap. It looks like it came up probably about halfway. Again, what we call consequential encroachment, and then get rejected back down. Again, fair value gap, more than likely it is going to want to fill that fair value gap going both directions. So we could see it run back up, fall back down, and then go back up. So just a little tidbits of information here and there that I like to share regarding smart money concepts, right? So it can be a lot, especially for people that are used to retail logic. People that think that trend lines are what the actual market follows, or that there's some kind of A, B, C, D thing that this thing is going to follow. Uh, uh, you know that is something that smart money concepts does not relate to. We look at basically price numbers, where they are, uh, you know, at the current time, price delivery, uh, because that's what the system will remember. The system will remember the price numbers. They're not going to remember the shapes that they take, if that makes any sense. So yeah, you can draw a line all you want, but that's not what the market's going to remember. The market's not going to know if it's going in a straight line up or down. The market's going to know, hey, did I miss this price or did I hit this price? If not, if I miss this price, I'm going to go back to it. Because when you see a straight line going up, and there's a fair value gap somewhere, just like I'm on the ES here. My example will be this. If you see this right here, this fair value gap, whenever the price started going up, we could have missed it could have ran up really high at some point and missed a whole dollar and us not even know it. Well, it's gonna go one back. Sorry, it's going to want to go back down and fill that dollar somewhere that it missed, right? So that's basically the whole premise of a fair value gap and why it's going to want to come back down into that area and fill it both ways, just as it did here. Came back down into that fair value gap and then ran back up, right? And here, this is the monthly. Again, looks kind of similar to the Nasdaq, but not exactly. This was again, so this is the June, not the May. This is the June. This is where this what the fair value gap got filled on the S&P 500. This is the mini um, December contract, and as you can, like I said, filled the fair value gap, ran back up it. Now, did it break that structure? As you can see, the wick here does not go below this one, so therefore all three of these consecutive candles going down are part of the structure. So therefore, this one did not actually break structure. Even though this candle may have gotten higher than this one, it did not break this and close above this as far as the monthly is concerned. So I would expect this to be a little bit more bearish uh, than Nasdaq would be, or at least not as powerful as the Nasdaq. I could see it. Basically what I'm saying is I could see runs being a lot higher and quicker in Nasdaq, and the S&P being a little bit more soft. Um, if we take a look at the breaker that we have over here, again, we have a low, right? So this last candle down here, last red candle, and we start with the green candle, we take off with the run up. So that would be the low, high, lower low. This red uh, uh, rectangle here, I would let me get rid of that there. I would say this would be the breaker for the month or the order block, depending how you look at it. Kind of the same thing, to be honest. In this particular case, not always the same thing, but it does run up, uh, hit the median threshold, right? Closes above it, doesn't necessarily wick to hit it, but it does close above it. But as soon as it closes above it, um, it's been hit and closed above previously, uh, and it gets rejected. So it looks like these candles here, pretty much these candles here, equal highs almost. So that I would consider to be almost kind of like manufactured liquidity, uh, meaning that at some point it is going to run those highs. Um, is that going to be this month? I don't know. I don't think so. I think we're going to see more of a bearish tone, uh, meaning that I have a feeling that since it did not break the structure, what could possibly happen is that this right here is not balanced. So I have a feeling this candle for the monthly could be coming down this way to balance it out. Now let's see where we're at with the weekly. As you can see, I put the monthly here. So just right at where that monthly is also at the very bottom of a weekly fair value gap. Coincidence? I don't know. This is what smart money basically teaches me. I don't think it's a coincidence. I think that means yes, eventually we will see a run back down to the bottom of this fair value gap, which would also be the balancing of the monthly candles, right? Then after that, again, fair value gaps like to be filled going both directions. It would be filled going down, and it would be filled going up once it touches the bottom. So to me, I would personally expect a little bit of a breakdown on the S&P, a little bit more so than the Nasdaq. Uh, and then once it touches the bottom, um, then I would expect to run back up. How long is that going to take? Who knows? I don't know if it's going to be this week. It could take all month. We could see a large consolidation this week. Um, you know, it all just depends. Again, you got to look for those fair value gaps that are going to be happening during uh, the times to trade, right? So those times to trade would be your morning New York session, which starts, of course, 8:30 a.m. New York time, ends around 11 a.m. New York time, starts up again 12 p.m. New York time, ends at around 2:30, 3 p.m. Well, of course, 3 p.m. is when the day's over, but generally between the 12 and the 1 time, 12 and the 1 hour of the New York time is generally when you want to be searching for another time to jump in the market for a play. Uh, Again, just want to throw it out there, not financial advice, just my experience, and of being in these markets and uh, playing the markets, I guess you could say. I haven't done much futures trading, to be honest. Previously, it's been a lot of stock investing, some crypto. Yeah, I just recently got into the futures, and it's been interesting. Not gonna lie, I like it better than than most of the trading that I have done. Um, it allows me to think a lot more. It gives me more opportunity to analyze the markets in a specific way that I like, and it gives me the opportunity to share it with you guys. To be honest, so let me see here. I'm trying to think about what we're looking at as far as the S&P could bring us in the future. Looks like it did run a short-term high here, close above it, but then it started backing down, and that was today. So today it looks like I ran back down. Um, Now why would that be? So we're looking at over here at this structure. I'm looking at the structure right here. So if we go low, if we go low, high, it'd be higher low. That'd be a mitigation block. We go low, high, lower, low. This would be your breaker block. So I would be looking at this block right here specifically, and it looks like it did dip down into that block and got rejected out, and that was today. So this could be acting as support for the time being. Um, Now, if we're looking over here at this side of it, I'm looking at this candle here being low, running up high, breaking down below it being a lower low. Now we're looking at this being a breaker. So it could run up to, since it did get rejected, it could run up. And again, like I said, over, longer period of time, what we could be looking at is a break. Hit the wrong thing. Hold on. Let me get back here. I don't even know where that came from. If I hit, okay, am I in the right spot? I think I am. I think, hold on, OB, order block, monthly. I just want to make sure I didn't move that too far or at the wrong spot. Okay, yeah, we're on the right spot. So, daily, again, rejected by this breaker, right? Runs above, closes above the mitigation block at one point, but gets rejected by the breaker. So we could see it run up to this bearish breaker here, and then possibly make its way back down to this fair value gap. That's personally what I would be expecting. Uh, I try to look at the longer term thing, things that would happen in the longer term versus what's going to happen within the next 15, 20 minutes, next day, things like that. Uh, I personally try to look at overall market structure versus, get down to, hey, what's going to happen in the next, like I said, just 15, 20 minutes. And I'm not going to repeat myself, even though I just did. So I have a feeling this could be running up, or it could run back down into this breaker, get to the bottom of it, sometimes that's what these markets like to do. They like to run down to the bottom of the breaker, get reject out of that, run to another breaker, and then run down into the fair value gap. As you can see, they kind of overlap, right? These fair value gaps in this breaker. Not really, though. They are almost stacked on top of each other. So running down to the bottom of this breaker would be like touching the larger fair value gap. Um, and if it entered that fair value gap and ran up, that would basically that would be called an institutional order flow entry drill, is what we would call that. So the order flow entry drill would be the entering of the fair value gap and then leaving that immediately to go find the breaker, right? Breaking the liquidity that is above here, right? Liquidity meaning there is equal highs, meaning you can see that there's a high here, there's a high here on the daily. They're both about equal. This is where people would have their buy limit set or their their buy stop set or their sell limit set. This is where most of the retail people would have those be sitting because that's what they're trained to have to do. They're trained to say, okay, there's going to be a breakout if it runs up above this. Well, what smart money would do is if it came down and touched this, ran up to this area, is it would probably break it for a very short amount of time, pull back down to make people think, oh crap, I made the wrong decision to sell off. And then it would hit this, which would then become a breaker at that point, if you're catching my drift. So that would become a breaker if let me draw this out so it becomes a little bit more apparent. So if it goes down, touches the bottom of this breaker, runs up, right, and touches this, and then everybody's thinking they're catching a breakout. It may even not even get that high. It could even get as high as, where, I don't know, maybe even, 41.20, something like that, or 46.20, sorry, somewhere around in there, because that would be where the bearish order block would sit. It could hit that 46.20 mark and then start dropping back into, at this point, it would be a breaker. As long as it closed above it, then it becomes a bullish breaker, right? Then it comes back down into the bullish breaker. It could stop right here and go up, or it can continue down to the bottom of the breaker and then go up. Either way, what it could do is it could fool all of the people that are going long right above here or trying to go short just below here, and then catch them off guard as it goes above and then cut short, and then people are stranded not knowing which direction to go. So that's basically kind of the premise of smart money concepts, is that you're taught to do one thing, as in the original market, or the original people that teach these markets, I should say. They say, hey, right here is an area. As soon as it breaks above that, you're going to have a breakout, so go ahead and buy. And then people do, and then all of a sudden it comes back down, right? Or they say just before it gets here, you should sell because there are equal highs, so therefore that's called resistance, so sell before then. And then what does price do? It breaks above there, so the people that are selling before there are like, oh crap, maybe I should have bought, and they start buying. The people that have already bought, it gets above there, and then it starts moving backwards, and they go, crap, maybe I should have sold. They sell, they buy, and then basically the people that are running the market, or the algorithm that takes over the market, screws them both over, and they take both the retailers' monies, or they're both the retail traders' monies. So that's kind of the logic, the premise behind smart money concepts, if that makes any sense. I hope it does. I hope it does. Okay, so anyways, this is basically what I'm seeing. Again, it dropped down to this breaker, hitting the top of the fair value gap, running that, what would then become a breaker, hitting that, or maybe hitting just above where the breaker is, Again, let me just double click on this because get this out of the way, because you see we could have a bearish order block sitting right here. We turn that red, and that could be a rejection point. So it could actually do one of these, close right there at that point, and then run back down to the bottom of this, and then run back up. So, and then once it's here, now again, this breaker is acting as resistance, or it could be acting as resistance, and then run back down to this fair value gap. So, again, it's all going to be about what's going to be happening at that time of the day, and where the fair value gaps are at that time of the day. So at that point is when you have to drill into your hourly, your 15 minutes, things like that, because this market could take directions. It could take a turn at any direction at any time. I just try to like to give an overview as to what could happen, um, by looking at the larger time frames, understanding what possibly could happen, and then when it comes down time to trading, then I try to figure it out then, right? And that's what I'm trying to basically bring out to you. But I knew I said I was going to go to gold, but that's about all the time I have, or else I'm going to be talking forever. So thanks a lot for you guys for listening, and I'll see you next time.